Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closure Show. As always, Scott Carson. Excited to be here with you today. And as you guys have requested, we are delivering. We'd love to hear from you guys of things you want us to focus on, niches, markets, strategies to take advantage of in what's going on in the current market with a lot of the distressed, not only mortgages, but also distressed borrowers across the place. And so a lot of folks have asked for, hey, can you get somebody who's focused on the South markets, maybe Georgia, maybe South Carolina, maybe North Carolina, some of those others? Well, we've got that today for you. So we've got an expert who's kicking butt and taking names. He's a rock star in the creative financing, the sub-2 space, specifically in two states, Georgia and South Carolina. And he's also filming a few other states. He is the host of the Networking with Nathaniel, sorry,
Yeah.
YouTube series on there. He is Nathaniel Hovsepian, and we are honored to have him here on the podcast today. Nathaniel, how's it going, man? You doing good
It's
today?
going. Yeah, I appreciate you. I didn't realize I have some shoes to fill here with fan requests. So I hope I can provide some value to y'all that are listening, in the future and get you kind of a little another step in your journey.
Yeah, man, no problem. You wouldn't be here
Yeah.
if we didn't know that already was going to take place
Yeah.
for you. So you're good. No pressure, man. Just two guys
Yeah.
shooting the breeze here for 30, 45 minutes and stuff like that. But let's
Awesome.
let's dive into kind of your background, how'd you get into investing, and then we'll go from there.
Yeah, I mean, the getting into investing is a little bit of a story, but like long story short, I had a condo in Southern California that I sold when we left in 2016, made some money on, and it kind of opened my eyes to, oh, wait, real estate's a kind of a thing. We were buying a primary residence in Oklahoma when a couple weeks before we were supposed to close on the property, my wife got a job, girlfriend at the time, but got a job an hour and a half away, and we're like, I don't want you to be in the car for 3 hours every day. So we ended up turning that, we still closed on it, bought it, and instead of moving into it, we fixed it up and it became our first rental. It became our first actual investment property. And prior to that, I had done stock trading and everything from like day trading to longer term hold with stocks, but always kind of been a how can I get my money out and working and making a return and try to gain passive income and all those, investment cliche trigger words, buzzwords. Yeah, yeah.
Yeah. And so you guys live now in North Augusta or South Augusta, Georgia, right?
No, yeah, North Augusta, South Carolina. So we're right on the border of Georgia and South Carolina. If you're familiar with the Masters, where the Augusta, Georgia is where the Masters is played, the big golf tournament. We're 25 minutes from there.
So I'm sure you get people there that have short-term rentals, stuff their whole week is made, or their whole
Yeah.
year might be made in a week there, basically, with some of their single-family rentals, or people renting out their own house so they get the heck out of Dodge for a week, huh?
There is. Yeah, there's people that they'll go rent an Airbnb in another location and rent theirs out for 10, $20,000 for the week. Usually you can get about 2 weeks worth out here. So it's a lucrative place to have an Airbnb for that couple weeks. It's always, if you're close to the Masters, it's always a good area just because it's a nice area and there's always people coming in and doing things in Augusta. But yeah, just for that week, 2 weeks, you can pay your whole mortgage off for the year for sure. I've
That's
I've
really
actually suggested it for our house. We're a little far away,
uh
but my wife Brittany is like, no way, I'm not coming in having somebody sleep in our bed and sit on our couch and do our own things. Like, yeah, that's true. It is a little, it's different. Yeah.
yeah. You don't want to think of like Tiger in his boxers on your bed.
No, yeah. Especially 2020 or 2000s Tiger. Yeah, no.
Yeah, exactly,
Yeah.
exactly. So you fall into being an investor, selling a property in California. You're forced to turn one into a rental, stuff like that.
Yep.
And so talk about kind of your. I mean, obviously, I think every investor goes through a couple different business models so they finally settle on one that they like or enjoy. And so, how did that come about? You kind of being where you're in the creative financing and subject to space for you. What was kind of the big trigger for that, or what?
I
Aha.
yeah, so I've been in a handful of coaching programs, mentorships over the 8 years, no, yeah, almost 10 years now that we've been investing. And um the creative financing was a little bit less of the motivating factor when I joined Sub 2, which is it's a community. It's a real estate investing community. It is a it is a coaching program in a sense. It is a mentorship in a sense, but it's a lot more than that. So I was doing direct to seller after buying that first rental property. Well, accidental rental property. And I joined Sub 2 because I wanted to get better at sales. That's really what motivated me is I knew some people that were in Sub 2 that were really crushing it in the sales game. And like, okay, this is a place that I can go and I can really sharpen the skill and hone this knife. Learning creative finance was a bonus on top of that. I joined a little bit late, and this is in my opinion that especially for subject two, which is when we take over a mortgage of somebody, not assume it, but actually just take over the payments and the responsibilities of it. Um, I joined in 2021, I think kind of at the peak of like, this is the sub two heyday. We have fallen past it now in a sense where home prices haven't increased a huge amount, but there's equity now in properties. The people that bought, 4 years ago when interest rates were below 4%, they've got equity. They don't need to sell sub two anymore unless they're in foreclosure, which we were talking about a little bit before we started going. Oh, I feel like I've just been rambling. Did I answer your
You
question?
answered my question.
Okay.
Yes. So you've been, yeah, you got into it, learning the process. You've been doing it for about 4 years, 4 to 5 years
Yep.
now.
Yep.
And I would agree totally with that. When rates were really, really low, you know, I would be willing to bet you probably see a lot of people that are the newer buyers, people that have bought their first time home buyers who probably are struggling to pay, or they bought a new home and now their taxes have changed,
Yep.
since they've been there for a year.
Yep.
With rates creeping up, it can still be desirable. I was a mortgage broker back, you know, 20 years ago before the crash. And I always laugh when I see a 6 to 7% rate and somebody's like, oh, it's too high. I'm like,
Yeah.
that was a good rate back 2004 to
Yeah.
2008 for the most part.
Yeah.
And it just means you've got to be a little bit more creative or work on penciling out the deal to be more specific. I mean,
Yep.
you can make some mistakes on selling an asset if you've got a 2% mortgage, right? As far as cash flow wise. And that's the thing I want to ask is your thoughts on folks that are buying or looking for subject twos, some that are looking for cash flow, or folks that are looking at and buying stuff with no cash flow. What's your thought on that? Because I know mine. I always like to hear what other
Yeah.
people think about it. What's your opinion of that?
So for us personally as a company, we're always looking for at least to break even as a long-term rental. We're taking on the responsibility of somebody else's debt, whether that is a sub two or just the person is creating a note for us on a seller finance or owner finance type of situation. This isn't a big bank that's going to get bailed out. This is an individual. And so we take it as our responsibility to make sure that that note is being paid, whichever avenue that we're going down. And so we have a couple properties that we do come out of pocket on because that long-term rental rate wasn't quite high enough to cover all the expenses of the property. And we don't like doing that. I would much rather own a property that is at least self-sustaining. And then we're playing the long-term game of appreciation, both from the price standpoint and being able to refinance out and get tax-free income that way, but also from a rental standpoint that over the years rent is going to go up, and even if it only makes $50 now, in a handful of years it's going to be making $500, cash flow.
Well,
So
and then you also on the sub two use the principal reduction over time too for you.
right,
You
yeah, so you
know,
have the multiple kind of levers that you're pulling or that are being pulled when you're holding a property, when you're holding an asset. And that's to your point with, even a 5%, 6% interest rate, it's still, you're getting in. You're a lot of the times, hey, there's a couple years of pay down. Like it's not a lot with amortization, that scam of amortization, but it's a scam. But at least you're getting something. You've got a couple years paid down. Now you're getting more into that principal pay down. You're getting a lot of the times we're getting into properties for very, very little out of pocket. We're not talking 10, 15, 20%. We're talking 3%. Like FHA type loans. So for us, that's where we're at. we do know there are people that buy these deals just for the depreciation and the long-term appreciation on them. And they're okay with throwing away a few $100s a month on, hey, yeah, I have to make up the difference between what this thing's going to bring in as a long-term rental because I'm going to get such a big tax benefit, and that like offsets that little bit. We're not in a position where that's a play for us. It's not, I don't really ever see us wanting to be in that position, but what's 3 years down the line? We don't know.
Yeah, and that's living life or investing on the razor's edge.
You're right.
If something happens, it doesn't take too much for things to happen for that. Yeah, if you're out of pocket 200, well, now, okay, that makes sense. Well, now you're out of pocket 300 or 400 because
Yep.
of things happening with rents dropping. That's one thing you have to look at too, these markets these days. There's where is rent going up? Where is it getting stagnant? Because there's a lot of
Yeah.
like we see that here in Austin, San Antonio. Rents have come, rents were going through the roof. Well, they're coming back down 5, 10, 15%,
Yep.
which is eating up a lot of people's profits when they were in the long term or even short term rentals. It becomes more difficult because of saturation of stuff.
Yeah. Yeah. It's funny you mentioned San Antonio. That's one of the ones that we have. We bought it just under a year ago, and we were going to do a wrap on it. And I don't know
Mhm.
if, your audience is familiar with wraps, but
So basically, that means you're going to take it over. Is this a sub two deals or you bought the property?
this was a sub two deal that we purchased, yeah, with the intent of it was a low interest rate.
Mhm. And then owner
So we
financing it and then
exactly.
and then making a spread between whatever the low interest rate and your interest rate. And then
Yep.
that would be a difference between what you're paying monthly for the, P and I versus the new P and I that
Correct.
you're offering stuff there. And so what happened? Did the rents numbers went down or what happened?
It just did like it sat on the market. We had multiple people try to sell it for us from realtors, from just wholesalers. It Nobody wanted to buy it. We couldn't figure out why. Well, 6 months go by and we're like, well, we gave it 6 months of a shot. We got to rent this thing out and, kind of stop the bleeding. Come to find out there's 8 other properties in this little neighborhood that are for sale. There's 8 other properties that are for rent. And like, okay, we just kind of entered into the bubble of San Antonio, so to speak, from a wrap perspective and a rental perspective, which it's one of those things when you open yourself up to nationwide buying, you're not super familiar with each market that you're buying a property in. And so it was a risk that we
It
took.
it happens. I mean, you could
Yeah.
definitely, you're looking at a property, there's no listed and stuff comes on the market. It happens. I mean, I
Yep.
had that happen before. We had a property I bought. The market, this is a few years back. Value was worth 300. I bought it for 150. I was all excited. I'm like, "Ooh, that's a good fix and flips." Well, then you have 9, 10 foreclosures on the same block. The value went from 300 down to 150. I was upside down on it after my
Oh
rehab costs.
man. Yeah.
And so I was like, well, I guess I'm moving into this property for a period of time, which was the only, me and my dog and cat, the only people living in a 3,500
Okay.
square foot house.
Oh man. Yeah.
you know,
Spread your
um,
wings out. Yeah.
yeah,
Spread
exactly.
your
And
yeah.
then
Yeah.
and getting rid of it a year later, you're writing a check at closing, which is not what you want to be doing, but
Yeah.
it made sense. Now it's rebounded. But I mean, you run into that. I mean, not every, and I'm glad you brought that up because this is investing is not called guaranteeing, right?
Right. No.
You're gonna have some hiccups. And I think that the biggest thing is too that I think so many investors, especially getting into it, they worry about that one deal. If it doesn't go knock it out of the park, they get all depressed and stop. Well, not every deal is going to be have. And that's why we look at buying multiple deals or portfolios.
Right.
So you're going to have some home runs, you're going to have some singles, and then you're going to have some ones that you're losing a
Yeah,
couple hundred
totally.
bucks a month on if it works
Yep.
out that way, right?
Yeah. And it's not ideal, but that's like you mentioned, that's why we've spread assets across the place. One of the benefits of buying nationwide is that, when a San Antonio starts to drop, well, Boise's not dropping right now. I don't know that for a fact. I'm just making something,
Yeah,
but
the
like,
Boise is one of the hotter markets for sure.
yeah,
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 definitely.
yeah. Um, so,
Anything closer to Yellowstone is going through the roof in a lot of
that's
cases,
right.
which is
And
ridiculous.
people talk about, you talk about diversifying your portfolio from a stock perspective. I want to be in tech and medical and all these different things. Well, let's diversify our portfolio from a real estate perspective as well. We can do that through the locations that we buy in. We can also diversify through the way that we hold properties. So you're a note investor, right? You could buy some long-term rentals as well. That way, when interest rates change, my long-term rentals end up doing better. Maybe you have some short-term rentals. Maybe you have some, co-living. That's something that we're very, very big into right now is renting by the room. And those are, we talked about creative finance, which is the acquisition or the selling of your asset, but then there's also the creative holding strategy. So notes is a creative, that's not something that most investors are doing. There, when you think real estate investing, you think landlord tenant, right? You don't think note investing. You don't think of the wrap like we described, where I buy an interest rate low and then I wrap a higher interest rate over top of it, and I essentially arbitrage that differential, the difference in payments. And so these are all creative strategies. It's pretty amazing when you start to dive into it, how many ways there are really to go about making money in real estate. Like,
That's I mean, been doing this for 20 plus years and stuff like that. I used to travel on the Ronald Reagan circuit and going to all these different seminars and seeing all these experts on different niches. Yeah, there truly is so many ways to do it. Not everything works in every market.
right.
You also have to understand what you're risk adverse to and risk for.
Yep.
The hours, if you have time to put it, because every strategy takes time of learning and investing your time in learning markets and what's going on. And that's what we say. We get stuff in from all across the country. I'm always like, listen, focus on 3 to 5 states, learn those 3 to 5 states foreclosure laws, get the bigger market cities there, get comfortable with those before you start diving into something else. That doesn't
Yeah.
mean you can't see deals or partner with other investors in other markets, but to for your own portfolio, get to know those markets firsthand so that you're pretty comfortable pulling the trigger. I mean, that doesn't mean jumping on a plane and going out and looking at one asset, but
Right.
building a team of realtors and vendors that can be your eyes and ears on an asset, right?
Yep. Yeah, it's funny you mentioned, like, we get stuck on being able to go see it. And we've probably half the properties that we own at this point I've never even seen in person. But we, like you mentioned, we have people that have seen them and gone and done inspections and walkthroughs and, given us opinions on what the values are, what they think it'll rent for, all those things. When I go buy a stock in Amazon, I don't go walk all the Amazon facilities. I just trust that the numbers that the experts are telling me are going to be accurate. And that's how I am able to do my due diligence. I see the real estate being the same way. It's a bunch of little businesses that I'm investing in. I don't need to go walk the floor. I need to have somebody who can go walk the floor for me, though, and make sure that there's actually a freaking house there first.
That's the important thing, making sure the
Yeah.
asset's actually there, not wiped out by flood or fire or
Right.
hurricane that we see here in the Gulf Coast a lot of times.
Yep.
Now, with your marketing, on your sub two stuff there, are you I mean, I know you say you got stuff across the country, but when you look at kind of a ratio of your local 2 states, 2 markets versus the rest of the country, how's that kind of pencil out for you?
What do you mean by marketing?
So, how are you attracting your deals there locally for you
Okay.
versus the stuff nationwide for you?
Everything is through wholesalers at this point and a handful of real estate agent connections that we have.
Nice.
I do a lot on social media, talking about what we're doing, trying to provide value to people as much as I can. That way, when a deal comes across in one of my areas, people, even from people from Colorado and Oregon, like they go, "Hey, Nathaniel's the guy in Augusta." And so they bring us deals that I wouldn't have seen otherwise. So we did direct to seller for 6 years, wholesaling and buying properties, but we decided at the beginning of last year, 2024, we're gonna shut all that down. We're going wholesaler only, just focusing on buying deals. And that has freed me up to, which we haven't talked about, get a little bit more involved in the dad health and wellness coaching that I've been doing for the past like 6 months now.
That's awesome. We want
Yeah.
to come to that. I definitely
Yeah,
I
yeah,
have a
yeah,
couple of
yeah.
notes for that. That's
Yeah,
good.
yeah.
But I love that. So you're basically heck with all dealing with the emotional of the borrowers or the homeowners.
Yep.
You're basically have outsourced your sales team
Yep.
to local wholesalers where they're the ones going out, wrestling the borrowers, the homeowners to convince them to sell at a discounted price and so forth. And then you're buying that and paying a wholesaler their commission
Yep.
between what you're doing. But they're doing all the heavy lifting, all the holding hands and baby baby daddy drama, I guess you could say in some cases,
Yeah,
right?
that's right. I there is an aspect to the talking to the sellers that I miss. Finding getting into the emotions of it and figuring out the problem and then coming up with a solution together. I do, but just all the follow up and all the tire kickers and all the no calls or no answers, that just it starts to wear on you. And I didn't want to scale myself out of that, at least not at the time. If I knew what I know now, going back 2 years, maybe things would change. But we could say that about so many things.
Amen to that.
Um,
Yeah.
yeah. So it is. I like how you put it. We've outsourced the acquisitions to third parties outside of our company, and I like paying wholesale fees as long as the numbers make sense to me. I'll pay whatever wholesaler fee makes sense. If it's 5 grand, that's what makes sense. If it's 30 grand, and I can still make money, I will pay you 30 grand every time you bring me a deal. So
That's awesome. Now, are you funding those wholesale fees with your own funds or other people's money as part of the deal as well? Or
combo.
okay,
Yeah. So we've done hard money, we've done private money lenders, we've done our own cash, we've done private money partners. We're actually going through a service called fractional.app right now to do a raise for future fix and flips. So you can come with us. I think it's as little as $5,000. You can be a partner in our fix and flip deals. And that's a pretty cool place to be, because a lot of the times, we're talking $150,000 to buy and renovate a property. And most people, me included, we don't have that sitting around to just go, yeah, I'll lend on this flips, fix and flip. But a lot of people want to get invested in real estate. And so, you know, it's, I guess it is creative. Like being in these creative circles,
yeah,
people think creatively and come up with this cool thing. So it's essentially a way that you can make a fund without having to go through all the SEC paperwork and filings. Fractional has done all that for you. They take care of all that when people decide to invest with you.
that's great because then it's not you're not violating anything by pooling funds. They're doing the all the regulations, the qualify. You're basically borrowing the money from, I guess, probably fractional.
Yeah,
Um,
I guess I'm not sure how that actually logistically works, but yeah, like, I want $100,000, for example, and I know 20 people that each have 5,000. They come in, they say, "Yep, I'm interested," and they give their money to fractional, and then fractional does all the paperwork. They take a percentage of it of course, so you want to over raise, but um, I guess you could just come out of pocket for it, but yeah.
so what's their fee for something like that? I mean, if you don't know, you don't know. But was it?
I,
I think I think stuff that I've seen like that before was like 7-8% of where the funding amount is.
oh,
I could be wrong or no.
no, it was less. I don't quote me on it. I want to say it was 2.5%,
Okay.
2.5%, but it might have been like, yeah. So they take a percentage of the raise and then they take a fee for like all the paperwork that they put together.
Okay.
Um, yeah. So it was reasonable for sure.
Of course, that's
If
actually
they're
that's
gonna,
really good. That's interesting
yeah,
they're doing on the fix and flips. I wonder if they would do it on the note side. I'll have to check that. So fractional.app basically is kind of the
it
website for
is.
that.
Yep. Yeah. I
That's
wish I had an
interesting.
affiliate link.
You know what? Go get you one real
Yeah.
fast and then send
Yeah.
it to me, and
Yeah.
we'll put that
Put it in
in the
there.
show notes for everybody. That's the
Yeah.
great thing about doing recording. We can do that. We can tweak that. But that's a awesome way of doing things. Now, on your oh man, what was it? These you're willing to pay them as long as your numbers come out. What are your that's what the question was. Where are you what's your kind of ballpark of what you're looking for, on a sub two deals? Are we talking like are you looking for a
Oh
200 to
yeah.
$500 spread? Are you some equity? I know it varies a little bit. What if you could paint your strike zone, your
Yeah.
hot button, what are those hot
Yeah. It's
spots?
tough. Okay. So typically we're looking 5% or less as far as entry fee goes compared to purchase price. And I will explain why that is, because people go, well, 5%, that's so little. Well, 5% is typically from a wholesaler is assignment fee, cash to seller, cash to realtor. So three things. Sometimes they'll include closing costs and transaction coordination in that assignment fee. But what they don't include is rehabbing a property. We're doing a lot of co-living, so we're going in, and even if the property's quote unquote turnkey, we still go in and add bedrooms. or change the layout a little bit around to maximize as many rooms as we can get in the property. Then we have to furnish the darn thing. Then we have to hold it while the rehab's being done, while we're furnishing it, and while we're marketing it until it's rented out. And so I feel like I'm missing something too, but um, you know,
Any back
usually there's
payments?
a
Are you having to pay any like back rearages too as well?
if there are arrears, if there's anything that needs to be caught up. So a lot of the times we see three line items from wholesalers as far as what the entry fee is, but really there's eight. And it's all those ones that I've listed. If I did a good job of listing them all, I think I did. But and then from there, we're looking at what's the PITI and what's the rent. Usually, we need about a 15% spread. So if it's $1,000 as a PITI, it needs to be able to rent for at least 1,200. That accounts for, all right. Yeah, I didn't mention that earlier when I said it needs to break even. It needs to break even with a property manager in place.
That's good. So that makes sense. PITI plus
Yeah,
PM. Mhm.
exactly. So that gives us the ability to make sure that the thing's managed and the PIT is going to be covered. And at that point, we haven't even accounted for, capital expenses that need to be done, maintenance, vacancy kind of things. Of course, we're not making any money on that, but this is an in case crap,
Do you
scenario.
see increased insurance costs in a co-living spot versus like a regular SFR?
Ooh, that's a word Brittany question. Do we have is the co-living insurance higher than just typical long-term insurance? She doesn't have that answer right off.
That's
She gave me the
okay.
blank scare.
That's
Yeah.
okay.
Uh,
You know, I would be willing, and then
oh,
also with your co-living, I imagine you have the opportunity, depending on the house, to maybe tap into some like city programs where it's like um well, we've got a buddy in Rochester who has a fourplex that he was able to turn it into like 12 rooms that was rented out. He rented them out to, well, to the families of people dealing with like Alcoholics Anonymous.
okay.
They're going through like a dry house, I guess you could say,
Yep.
or we've had somebody else do it where they were dealing with adults that had were mentally handicapped or mentally challenged. You know what I mean? Kind of
Yep.
like a not a assisted living, but kind of that aspect of things too for you. I think that's an opportunity, huh?
Yeah. Yeah. And that's one of the so we did co-living all of last year, and one of my issues with real estate is that I'm not like pulled towards it. I'm not driven for it. It's just a way to make money and way to grow your wealth for me. I haven't found that yet as far as passion goes. But we did co-living all of last year, and then maybe a month ago, I go, well, how do I put my military, my veterans, and the co-living together? And so we're exploring an idea here locally to us at Fort Eisenhower of creating a co-living situation specifically for military personnel that are coming in for training, because this is a cybersecurity capital for the government right now. And so there's constantly people coming in and training. Would the cities do any subsidies there? No, I mean the government's already doing that, but there is also the opportunity for housing homeless veterans, which would be near and dear to my heart as well. And that would come with, potential grants and things like that. But those are down the line
Down the line, yeah. Well, but that's
kind
that's
of
that's a
thing.
beautiful
Yeah.
thing to be able to do that and help out. It's kind of like executive leasing in a lot of cases. People
Yeah.
coming in for 90, 100-day trainings and out. We took over some condos down in Homestead, Florida, near the air base. We're
Okay.
based in there, and it
Yeah.
was the base actually managed it. We were getting 101.5 times regular market rent,
Yep.
and they furnished it. They would just keep people coming every 90, 120 days. Somebody else knew was coming in, and we were just getting the checks.
Yeah.
And
Yeah. It's nice.
that was a very nice thing. Yeah, definitely.
Yeah.
Uh,
Yeah.
but that's a beautiful thing, and I'm so glad you brought that because I think a lot of real estate investors, they get into that, hey, I'm gonna buy real estate to make money, and it becomes another job for them. It's not a Some are passionate, but others over
Yeah.
time you just like, okay, this is another rental, this is a sub two, here's another note. It's you exchange one hamster wheel for kind of another one in some cases,
Right.
right?
Yeah. I think it's pace that does this. He's got a reel that comes out every now and then. It's like I traded in my 40 hour, or yeah, I work 80 hours a week for myself, so I don't have to work 40 hours a week for somebody else or something like that. Like, yeah, it really is. I enjoy these aspects of it. I enjoy having the conversations. I really enjoy helping other people out, as far as new people coming into real estate. Like, how can I provide value for you? But yeah, it's a job at this point. Hey, little girl.
Well, let's talk about your YouTube channel real fast because you've got
Yeah.
a regular daily network, not daily but weekly YouTube channel. Share with that with our audience about what you're doing with that.
Yeah, so I started. I'm not 900, whatever episodes you guys are at. I'm at 80. You're going to be episode 91 in 3 weeks, I think. So there. I
Nice,
started that a little over a year and a half ago because Pace told me to, for one, and I wanted to. The reason the podcast that I started was because I wanted to meet and network with more people like yourself outside of specifically what I'm doing, gain insights to what other people are doing, where their struggles are, where the successes are, what they're working on going forward, and how I can make connections for them. So I'm guiding it a little bit away from real estate in a sense and making it a little bit more entrepreneurial as things go on. I don't think I mentioned the title. It's called Networking with Nathaniel. Um, yeah, and if you just search my name on, I
we'll
mean, you
we'll
could,
put the
yeah,
link in there. We'll put the link there, everybody
yeah,
can
okay.
go to
I
it. So
mean,
it's, yeah, it's
I'm
and
the
then you
only
link to the YouTube
Nathaniel
channel.
Hovsepian that's out on Google these days.
Pretty easy to find that name, not like
Yeah.
Scott Carson or Joe Gonzalez or something like that.
Right. Yeah. I mean, there are other ones out there, but they're not as like consistent on social media as I am. So yeah.
But that's a great thing and I'm glad you brought that because you're a couple of things I hope people take away from this. A, you're leveraging other people's experience to find you deals with the wholesalers. And then you're
Hmm.
also leveraging the number two search engine on the number one, owned by the number one search engine with your regular networking event to learn more things, to connect with other experts in other fields and bringing people together. And it's all about network these days, not so much
Yeah.
about what you know, but the combined knowledge of your network is so valuable. I mean, that's why we're at 975 episodes and getting stuff out because the more people that listen, you never know, where a deal is going to come from or where a funder is going to come from or who's listening and watching. And it takes them 6 months to reach out to you to do something, right?
Right. Yeah. And it takes 7 to 13 times of somebody hearing your message to go, oh yeah, okay, that person's credible, that person's trustworthy, that person aligns with the values that I have. So the more of these things that we can do, and the more we can talk about those values, the more opportunities to connect with people and do deals and do other things, you know, come about.
Exactly. Now,
Yeah.
you talked about having a passion with your
Yeah.
wellness and health. Let's talk about that and how that kind of came about, and
Yeah. So
how you're using your real estate to finance that.
we're not using the real estate to finance that.
Okay, or
Yeah.
your
I
real
need to
estate's financing
make
your
sure
life to be able to do
somebody's
that.
listening. Yeah,
Yeah,
yeah.
yeah, yeah.
No. Um, we will be here probably pretty soon. But from the networking, from the sub two, I met my current partner. It's called Fit Fatherhood. His name's Zach Bush. We met. He was one of the first people I met in sub two. When you come into sub two, they tell you at the time they said go meet 25 people, and I did a great job of that. I went and met 25 people and talked to almost none of them ever again because I didn't know what networking is really. We just did the hey, this is what I'm doing. Hey, this is what I'm doing. Okay, cool. Maybe we should do a deal sometime. See ya. Um, but 2 years go by, and we end up in another tighter circle, another little coaching program that we were in. I'm like, oh, hey, Zach, how you been? What are you doing? He's a dad now. I just had my second kid. And we started kind of talking about that, the fatherhood aspect of things. Now, for him, he's a CrossFit coach. He's a precision nutritionist coach, and so he's been doing that. I'm on a call, buddy. Okay, thank you, buddy.
That's good. That's the great thing about working from home. You
Yeah,
get to be interrupted by your kids, right?
and he does an excellent job. That's the 4-year-old. He comes up and touches me on the hip and goes, and he just waits. he did say hey dad one time, but the 2-year-old, he just comes up and goes, hey dad, hey dad, hey dad, hey dad. I love you, buddy. But yeah. Uh, so, health has been a part of both of our lives. I was in the Marine Corps. I was a collegiate athlete. I've, done physique, physical or what bodybuilding.
Yep.
And so, the health and the wellness has always been a part of both of our lives. Then the fatherhood aspect comes in, and then we're realizing all the things that we've learned as entrepreneurs from goal setting and time blocking and creating action plans and just the mindset that goes into setting and achieving goals. Man, this is really applicable to health and fitness and to fatherhood and to all the things. And so we decided, we want to help busy dads, entrepreneurs that are out there moving the needle in their business, moving the needle in their careers, and just feel like, man, there's not enough time for me to eat, proper nutrition, for me to get a workout in and still be a good husband and father. And what we do is we break things down. Hey, what is it the goal that you're trying to accomplish? Okay, how can we break it down into weekly, daily actionable steps that you can do? Fit it into, that's a bonus of calling it fit fatherhood, is like we're fitting it into the fatherhood. And so, yeah, as I talk about it, I can feel like, man, I'm so much more excited.
You can see the energy. You got a little bit
Yeah,
louder in your voice, but that's a beautiful
yeah.
thing. Because I think, and what sport did you play? Or what were you an athlete at? What did you do?
Basketball and track.
Very nice. Okay.
Yeah.
And so I think one of the big things coming as an ex college football player years ago, I think we miss, and I'm sure you missed this from being in the military. You were in the Marine Corps, am I correct? I think you mentioned
Yes.
that.
Yeah. Yep.
Awesome. Thank you for your service, by the way.
Yeah. Thank you. Yeah.
Is when you come into real world in a lot of cases, or you get leave the sports. I think that team dynamic is missing. That brotherhood is
Yep.
missing. Accountability, where your guys can hold you accountable, really is missing. And I think a lot of people too, when they leave their job and they become an entrepreneur in real estate, that freedom of unaccountability strangles people. I know when I left my first
Yep.
job to attempt something, the freedom is what caused me to fail. I wasn't dedicated. I didn't block things. I was like, well, I'll just get up at 10 o'clock now versus 8, and
Yeah.
I'll work for 3 hours and I'll hit the happy hour,
Yeah. I'm a
and
business owner.
yeah, exactly.
Yeah.
Yay.
Yeah. Yeah.
And I think we need more, because let's face it, a lot of real estate investors are not really physically fit. You know what I mean? And that's because we tell us, I don't have time. I got to show up at Home Depot.
Yeah.
I got to run to do this, or I got to sit in front of my laptop. And one of the most important things I've done, I say, is COVID. Is like, I'm home. I got to make sure I go for a walk every day. I got to get out if I can't go to the gym. I got to stay
Yep.
active of some sort, and that's awesome. So, how is that? You've been doing that for a while now with a fit fatherhood.
We're still in the infancy stages. We're 6 months
6 months, awesome.
into, yeah. So we're still just getting, I call it, like, we're just getting started. We're barely just beginning. Yeah, and you kind of hit a couple nails really on the head there with the, leaving the military, leaving a job, leaving team sport, even in some respects, getting out of high school and college. You're being told where to go and what to do and how to do it. And like, it's very easy to follow along, especially getting, in the Marine Corps, in the military. It's like, hey, be here at 6. We're going to do this for 5 hours. Then you're going to go to lunch and you're going to be back in 45 minutes. Then you're going to go back and you're going to clean your, like, all those things are told to you. So when you get out, you have all this freedom, and things can easily creep in and fill your time. And so a lot of the times we start with, hey, what does your day look like? I don't have the time to get a workout in. Well, let me look at your day. Let's do a time audit. Well, look at this. You scrolled on Instagram for an hour and a half today. I'm not saying to get rid of Instagram entirely, but maybe we could take 30 minutes of it out and you could get a 20-minute workout in. Okay, so there's time there. And then the accountability, the community, like those are things that you're missing, especially as men, as dads. We don't have a place to be vulnerable and just to talk about this. We do a lot of coaching calls and people will go, man, I've never talked to somebody else about this. I know that's why we're here. because we need to have the back and forth. And
You got to have the back and forth.
yeah,
I'm a part of a Bible study group that meets on Monday nights, stuff like that, for an hour, hour and a half.
okay,
And you have vulnerability there. You share things that are going. Everybody's going through a variety of things. It's not just all about, hey, how many deals can you close and what were the
right,
paychecks. If
yeah,
you have a crappy quality of life and you're not enjoying things, not only is it detrimental to you, but it's detrimental to the most important people in your family, your
yep,
kids, your spouse, and they want you to be happy. They and when you can find that joy, being able to, because I'm a big believer that when you have a bad day, shit should not flow downhill, right?
right,
It
yep,
should flow uphill.
yeah,
And that's the way having a networking or accountability group like that is so important. You can share that and not take it out on your spouse or your kids because you're frustrated. And we always get don't get me wrong, our spouses and our family are the greatest people we love the most, but they also take the most amount of shit from us in a lot of cases.
yep, yeah. And it's that's a tough realization, but inside of our community, outside of the community, we talk about grace, like just give yourself grace. And so, every now and then the shit's gonna flow downhill, and it's okay. I gotta give myself grace. If you haven't been just doing that to your family all the time, they're gonna give it to you too, hopefully. But you know, having that area, that space that we can talk about these things, be vulnerable, and then the community, the support comes in and goes, dude, it's all good. We all have bad days. We all have these things. And you know I've said this a handful of times over the past couple of weeks, but it's this visual that I have, is that we all have these cups, and in our family we're walking around with these cups, and especially the kids, but the spouse, they reach out to you for your cup, for to I need some cup, I need some in my cup right now. And if I'm not taking the time as a dad to pour into myself and fill up my own cup out of the pitcher of exercise and nutrition and mindset, when they come up to me, I don't have, all I've got is shit in there, so to speak. So I just pour the shit in there. And
Or that you don't have anything and they go other places to get their cup filled, which is not what you
yep,
want, right?
right. And so it's tough, but as that father, as that dad, as that man, as that husband, we've got to take the time, because if you're not doing it for your family, what are you doing it for? If you have a family, if you're out there building a multi-million dollar business, and then 10, 15, 20 years from now, your health is so crappy that you can't enjoy all the fruits of it, what was the point? If 20 years from now, your kids don't recognize you because you were never there to take care of them, to be with them, to fill their cup up, what was the point? Now there are people out there that don't care about that, but for me, I'm family first,
Well, but
first and foremost.
I think that's a definitely thing, because I think we do have, you look at real estate investors, and I've been a part of some big masterminds, and you're always, there's a pretty good size. I mean, divorce rate's already high across the country anyway, but you see a lot of them going through divorces, and that passion to do more affects them derogatorily. They fill it with other things, and it's
Yeah,
unfortunate to have that. And like I say, financial freedom isn't always numbers. It's not having 3 million in the bank. Maybe it's making $3,500 a month to
yeah,
not work so hard so you can spend more time with your family and kids.
yeah,
Now, I don't have any kids besides the four-legged kind, but it's the
right.
same aspect of
That's me.
things,
Yeah,
of enjoying your life and having truly a life, and not being handcuffed to a job or something you're not passionate about.
yeah. Well, and you mentioned the going out and taking a walk. We don't realize sometimes until we go do those things that they give us energy, they give us focus, they give us mental clarity. That going outside and getting a walk could be the best thing that you do for your business. And it's cliche in a sense, and it's a little woo woo until you go do it and you realize, oh, it's not that woo woo. Like going outside and getting the sun and getting the fresh air and getting the movement in, and being alongside, you mentioned a dog and a cat, and maybe you take the cat out too, but I don't, like have, your best friend is there next to you, your dog's walking with you. So all those things combine to give you energy and revitalize you. And if taking a 20-minute, 30-minute walk at 1:30 in the afternoon sets you up for the second half of your day, you should be doing that every day.
Yeah, and I think that's the big thing is I like what you said, is prioritizing, looking at your schedule, blocking
Yep.
things out. One of the things that I did years ago was literally just say, okay, I'm not taking any phone calls till 11 o'clock. I got to get my
Yep.
morning, morning is mine
Yeah.
so that I have more effective. And I notice a huge difference from it, mentally speaking, just
Yeah.
the focus, the clarity, and you can still get the amounts. You'd be surprised. I may have 3 hours less a day, but I still get as much stuff done and more effective and more in it, especially come the afternoon, because I have
Yeah.
that morning to myself. I'm not burnt out and worn out and exhausted and be able to do some things.
I would guess it makes you more intentional with the calls that you do take
Oh
too,
yeah.
because you're
It,
like, you're not just like, yeah, go ahead, schedule it at 9 o'clock in the morning. No, no, no. If I only have 2 hours worth of calls, I got to make sure that my 2 hours are filled with really high value, high priority calls. So,
exactly. We go from hour
yeah.
calls to 30-minute to 15-minute really fast on that. Let's make sure it's more active stuff. Now,
Yeah.
how do guys out there get involved in the fit fatherhood? What's the best, is there a website? Can you kind of go through the process? Is there like is there a mentorship with it? Is there kind of like an onboarding kind of coaching aspect of it? Dive a little bit more
Yeah.
deeper into that,
The
Nathan.
best way, so the best way to kind of dip your toe in the water, so to speak, is to come to our Facebook group, Fit Fatherhood, on Facebook. You can go to my website here, nathanielhovsepian.com, and the website or the Facebook group will be there. The Facebook group is free. It's just a community to come in. We try to give as much value in the community as possible, but ultimately we are coaching dads for their health and wellness. Most of the people come in to lose weight. They're eating and they're not eating the best, or they're not really eating at all. They're drinking multiple sugary drinks a day, and we're working on that. But it's about being intentional with the time, like we mentioned about the phone calls. And it is I don't know if I mentioned, it's a 12-week typically coaching, and we do see a lot of people that stay on for 12, for kind of further after that, because while in 12 weeks, we can give you pretty all the tools that you need. Really, I can do that in like 5 or 6 weeks. Hey, these are the tools you need. You need the accountability, you need the support, you need the back and forth between, hey, this is what's working. You know, like I mentioned, a lot of people come in for, hey, I want to lose weight. Well, at some point, the scale is going to stop. It's going to stop moving. And you can either accept that if that's what you want, or you can go, no, I want to hit this goal. Now what do we do? And so we bounce ideas off of each other. Hey, this is what we've been doing. Maybe we need to tweak a little bit here. And so having that one-on-one, coach that's able to go back and forth with you is really helpful. But long story short, Fit Fatherhood Facebook group.
Love it. I
Yeah.
love it. I love it. I love it. But that's important, it's great to have a passion and a true cause out there
Yeah.
to spread the genius behind that you're doing and experience and the folks that you're helping. And that's awesome. If you only been doing it for a month, like, it's not about 6 months and driving into it. Yeah, I've already checked my stuff out. I think it's important that
Yeah.
folks
I
have
appreciate it.
that opportunity out there. And just accountability and in group, and it's one of the most important things we need as entrepreneurs, people to bounce the
Yeah.
stuff off of there for, and especially military as well. Folks in the military, they're getting out of that. They need that accountability and that group effort more so than anything else. So,
Yeah.
if you fast forward, what's the rest of the year look like? Any big goals for you here in 2025?
Yeah, we want to help 100 dads this year. So we want to get 100, and those are like coaching clients, not just, hey, we helped 100 dads. We want to help 100 dads make a significant change in there. In 12 weeks, you're a different person. That's really the goal. So that's really real estate. We're just kind of sustaining where we're at right now, and trying to figure out, we're very blessed that we're able to go, hey, what path forward do we really want to take that is in connection with the values that and the life that we've been building. So we're very fortunate there. But where I'm really focused and I really want to pour into is that fit fatherhood, is helping dads out. Yeah.
Awesome. Well, wealth and health are just as equally important to making it. So
Yep.
it's been an awesome episode. Once again, best way for folks to reach out to you is the website there for you.
The website will take you to any social media platform that you're on that you wish to connect with me with. That's probably the best place to go. Yeah.
Awesome. We'll make sure to put that in the description of the podcast and the video. Daniel, this has been awesome, man. Been really, really enjoyable. Thank you
Yeah.
so much for sharing your background, where you got into it, and then kind of the journey, and then obviously your passions. Been very important for folks out there as well.
Yeah. Thanks for having me, brother.
No problem. All right, everybody, take some action. If you're a dad that's looking a bit more fit, or a man that's looking for accountability and want you to get someplace on, check it out. Check out the website. Take what Nathaniel's talking about. If you're an investor out there, guys, take what he shared. He shares some amazing nuggets on how he's able to build what he's built and delegate some of the pain in the ass jobs to others that are more experts across the country out there. So go out there, take some action, buddy, and we'll see you at the top. Hey, real estate investors. So you want to dive into the world of note investing, but don't currently have the funds to sign up for an expensive class or a workshop or one-on-one coaching. Well, then you definitely want to check out the biggest bang for your buck in the note world, and that's our WCN membership. It get you an all-you-can-learn access to our class workshop replays, tapes, weekly coaching calls. For $97 a month, it's the biggest bang in the note industry because you get access weekly with me. You can book one-on-one phone calls with me. As we get different tapes in, we'll share them with our members after our one-on-one coaching students get access to us. We share a variety of tools, like I said, replays to the previous workshop, special discount codes to other events that you can take advantage of to help you get more bang out of your dollar every month. We've been investing in notes for over 20 years, and one of my biggest passions is helping note investors, big and small, get started buying notes. Yes, I got started years ago with no money, no savings, and no list, and I love helping people close on their first deal, get their first private funding partner to help them fund more deals and help them both make above average returns. If you're looking for somebody to help you take your note investing from 0 to 60 and want to get started, my WCN membership is a great place to get started. Like I said, we upload lists to it, video training, coaching calls for $97 a month. What can go wrong? The only thing we ask is you hang around for 6 months, and then if you don't like it, you can cancel. But check it out at noteumbrella.com. That's noteumbrella.com. That's our WCN membership. Get looking at assets today. Start putting your fingers on the trigger to pull the trigger on some note deals here before too long. Yes, anybody can buy notes. I don't care your age, your savings, what race, color, whatever it is. Note investing is all about what action you take, and the first action you should take is signing up for our monthly membership at $97 a month. That's noteumbrella.com. You can also access it by going to weekclosenotes.com and checking on the monthly membership. But we are here to help you. Scott Carson, the Note Guy. We look forward to seeing you at the top. Hey, real estate note investors, this is Scott Carson, the Note Guy, and I've been an active real estate investor for over 20 years. And for the past 15 years, me and my students have relied on one company to help protect our assets and also help to create our LLCs and different entities and business formations and our asset protection to make sure that we're protected and aren't violating the corporate veil. What company is that? That's Laughlin and Associates here. They're out of Reno, Nevada. Huge fan of what they do and the customer service that they provide, not only me, but to my students, not only across the country, but across the world, especially for those looking to start businesses here in the United States, whether you're from Mexico, Canada, overseas. One company you want to reach out to is Laughlin and Associates. Aaron Young has owned this company for quite a few years. Laughlin has been around for over 50 years, and it's really the #1 place for you to set up your LLCs through the Nevada LLCs or Wyoming or Delaware Limited Trust. They're just an amazing company to not only create your LLCs, but also follow up with the regular bookkeeping that you need to make sure that that corporate veil surrounds your business and keeps you safe from ne'er-do-wellers. All right. And like I said, I have been a huge fan of them. We've used them for every LLC, every entity we use, and they do just an amazing job in answering questions and helping to set up also our future, our estate, our Rockefeller plan, our asset protection plan, not only now, but as we evolve and grow more wealth and more assets. Laughlin Associates is always there to help answer our questions and help structure the things to keep our assets safe. Don't you want to keep everything you've worked for, whether it's your business, your real estate, your investment, safe and sound from the folks out there trying to take you down a notch? Well, make sure you talk to the team over at Laughlin Associates. You can schedule a free phone call at 1-800-648-0966. That's 1-800-648-0966. Tell them that Scott Carson sent you, and they'll take good care of you. Or check them out at laughlinusa.com. That's laughlinusa.com. Trust me, that's one phone call, one meeting you will never regret.